Hi friends, this is the generation of technology. So we at Iyer Commerce Classes decided, why not use technology for the sake of studies, for the benefit of students. So we have compiled all the critical points, the basics of every chapter, rather the most important chapters at one place in the form of a mobile app, which you can listen to it whenever you want, at your convenience, without requiring Wi-Fi, no internet required, no 3G, no 4G. You just have to download in your mobile and listen to it at your convenience. My advice, listen to all the chapters at least thrice a day till your day of the exam, and I'm definitely sure you'll be able to remember all the critical points during the examination. So friends, take this mobile app, use it and score maximum marks in your examination. Wish you all the best. Friends, now let us start with the chapter called cost sheet. You will start with units produced, units sold, and with two columns on the right side, total and per unit. First one will be direct cost. There you start with direct materials. Nothing but raw materials consumed. The formula will be opening stock of raw materials, add purchase of raw materials, add carriage inwards, less closing stock of raw materials. I repeat, opening stock of raw materials, add purchase of raw materials, add carriage inwards, less closing stock of raw materials. Second is direct wages. Third one will be direct expenses. Direct materials, direct wages, direct expenses will give you prime cost. Direct materials, direct wages, direct expenses, you get prime cost. Now we go to indirect cost. Indirect cost we start with add factory overheads. It is also called factory on cost. Some examples like factory rent, power and fuel, factory supervisor salary, etc. You add all these items and then you less sale of scrap. In the outer column you will write net factory overheads and you will also calculate the per unit. After that you add opening stock of work in progress less closing stock of work in progress. We get works cost, also called factory cost. Then we add office and administrative overheads. Example, office salary, office rent, depreciation of furniture, printing and stationery, etc. You add up all these, write them in the total column and calculate the per unit. You get cost of production. Then you add opening stock of finished goods. Then less closing stock of finished goods. We get cost of goods sold. Then we add selling and distribution overheads. Example, transportation charges, advertising, carriage outwards, etc. You get cost of sales. You add profit and then you get sales. So friends, I am repeating once again, direct cost, direct material, direct wages, direct expenses, prime cost, add factory overheads, less sale of scrap, opening stock of work in progress, closing stock of work in progress, you get works cost. Add office and administrative overheads, you get cost of production. Add opening stock of finished goods, less closing stock of finished goods, we get cost of goods sold. Add selling and distribution overheads, we get cost of sales, profit, and lastly sales. Important points. Point number 1. Units sold is equal to units produced plus opening stock of finished goods in units minus clothing stock of finished goods in units. In many questions, they will give you units produced, but they will not give you units sold. So you have to find out units sold by applying the formula units produced plus opening stock of finished goods minus clothing stock of finished goods. Number 2, if opening stock of finished goods and clothing stock of finished goods are nil, I repeat, if opening stock of finished goods and clothing stock of finished goods are nil, it means units produced is equal to units sold. Number 3, unless otherwise specifically mentioned, clothing stock of finished goods should always be valued at cost of production per unit. In many questions, they will give you clothing stock of finished goods in units, but they will not give you the value. In such cases, clothing stock of finished goods should always be valued at cost of production per unit. Fixed assets and financial expenses will never appear in the cost sheet. For example, interest, income tax, donation, loss by fire, loss by theft, bad debts, discount allowed, etc. should never appear in the cost sheet. Thank you. Sometimes we are asked to prepare cost sheet of more than one product. In such cases, they will give you some common expenses which we have to divide between two or more products in the following ratio. It is called total ratio, which is given by per unit ratio multiplied by units produced or units sold, as the case may be. Next point. Sometimes they will give you semi-variable expenses, where we have to divide these expenses between fixed and variable. The formula you will apply is difference in cost upon difference in units is equal to variable cost per unit. Thank you.